let's see what's going on here.
Do you drive for work? Looking to maximize your tax deductions easily
All right, looks like we're live. Awesome. Okay, this is my first live stream here. My name's Anthony Fontana. I'm a CPA, and I think I'm going to start doing some live streams of helping people with TurboTax because I've just seen so many people come to me with help after the fact that they've filed using TurboTax and have issues with the IRS and for essentially simple mistakes that they've made. So just here to help out, essentially. Going to start with doing tax returns, essentially mock returns with using example tax forms, W-2s, 1099s. Start with that, and then, hopefully answer some questions that anyone out there may have. Doing this all just to help people out here. So bear with me as I essentially figure out this software, because this is not something I'm generally familiar with, but I know taxes and I know how this should work. So let's get going. I'm going to start with essentially just the basics. Logging in. Well, I've already logged in. I went through that process hassle of, hey, I forgot my password, and went to my email and then my phone to retrieve those verification codes, and I'm in. So anyways, without further ado, let's jump in here to sharing my screen. So here we go. We start here. Let's make sure this actually works before I get going, because yeah, I'm not so sure. Okay, deal. Looks like it is working. That's good. Okay. Well, let's go. Let's get started here. Without further ado, right? Okay, it's going to ask us some general questions here. Deal. Tell us a bit about your taxes. So I'm just going to click like a kind of a whole bunch of things just to kind of go through this. Okay, I have children. I own a home. I pay rent and I own a home. I guess that's kind of tough to do. I have a W-2. I want to maximize all this stuff. Donate to charity. Unemployment, crypto stocks, self-employed, and a freelancer. Let's continue. How comfortable you feel doing your own taxes? I feel comfortable doing it on my own. I'm a CPA. This is kind of what I do based on your answers. Okay, this is what I should get and pay for. Deal. Start for free. Let's do it. No commitment yet. The TurboTax doesn't really make us pay until essentially we go to file the return. So you can go through this, but not file, or not have to pay until you file is more like it. And a lot of waiting around. Final experts review before you file. No, I understand. Okay, keep going. All right, the basics. Here we go. There I am, Anthony Fontana. My birthday, a made-up date. All right. 90 will do. Zip code. All right. Nice. Here we are. How do you feel about your taxes? Again. Okay, I'm ready. Let's go. Let's go. Continue. Oh, geez. Man, they nonstop with this this advertising as you go through it, huh? How did you do your taxes last year? I'm going to say other software. As I've just never used TurboTax myself. So, you know what? I'll go with the Accountant Tax Pro. So, like, I have my tax return itself. Or you could click that. Okay, deal. Tell us about your year. What was your marital status as of the end of the year? So, this is always like a question I get a lot. Is that, what if I got married in October? Am I married for the full year for taxes? Yes, you are. It's as of the end of the day. So like if you got married on the 31st, you're married for the full year. Or if you got divorced on the last day of the year, you are single for the year. Okay, so I'm going to click married as I am married. Did any of these apply in 2022? We're just going to stay away from this. I'll get back to any of this, though. This is just kind of help in terms of what forms TurboTax is going to request. But I'm almost positive you can always kind of go back and input any forms. Maybe you didn't check any of these boxes here. Okay. Look at that. Show more. Show even more. Look at that. Wow, okay. Did any of these, right? So they're asking the same things that we asked previously, okay, but with additional questions. Okay, this is good. Right, we'll say vehicle registration. We'll do the rental income as well. College to, well, I might as well do that as well. Let's just go for all of these here. Gambling winnings, might as well. Child care expenses, crypto, IRA, student loans, dividends, stock sales, HSA, retirement. Look at that. I'm everything. I'm retired and I'm going to school. Social Security. Just kind of want to cover all the bases for everybody here. Unemployment, alimony, medical expenses. I'm going to stay away from farm income. That is rare. Well, especially from where I'm from. But maybe where you are, it's a little more common. But I'm going to stay away from that for now. All right, here's a nice summary. Deal. That's cool. Keep going. Let's see here. Am I having... No, okay. If anyone has any questions... Let's shoot. Do I have anyone in this chat? If anyone has any questions... Is there anyone in the chat here? Man, I can maybe kind of see that. If you do, throw that in the chat there, and I can address those or make a video moving forward to address those. My goal here is to make at least or go through 2 streams a week throughout the tax season. So if maybe you don't have a question now, but later you see I'm going to put up a stream and you got a question there, make sure that you address that so I can cover that for you because I'm sure there are others that have the same question. Deal. Okay, let's go. Continue. Limit offers you received only what you need. Sign consent. Okay, if you choose to sign this consent form, we will simplify your offers to what fits your needs, which means you'll see fewer offers overall. Okay, deal. Well, I am filing jointly. We value your privilege. I agree. Decline. What is this saying? Consent for use of tax return information. Unless authorized by law, we cannot use your tax return information for purposes other than preparation. Okay, so you can choose to have us use your return information to personalize your tax. No, I don't want them to do this. Decline. What? Okay, well, here we go. There I am. Today's date is the 7th of the new year, and my wife. There we go. Okay. And decline. We do not want them to use my information here. All right. Awesome. For in here, you text, no, this is not mine. Manage this one. Close. Okay. Just trying to figure out this streaming thing. I apologize. This is the first time I've ever done this, so kind of just making sure it's working. But it looks like everything is working, which is nice. Okay, we have 3 people in here. Nice, and 2 likes. Look at that. All right, let's go. Let's get to entering some information. Personal information. There I am. I'm going to put my middle initial. I think this is important to distinguish you just in case you have a common name. Okay, date of birth and my social security number. Does this even pop up? Okay, well, we're doing fake ones here. Well, obviously, that's not a real social. Of course, it doesn't even say it. Okay, this is totally made up here. Just jotting in numbers. So there's that. Occupation. I'm going to say tax accountant. You know what? Just so maybe that's someone else's. There we go. That's probably not somebody's. Okay, deal. I'm a member or former member of the United. Nope, I am not a member of the Armed Forces. There are essentially an additional deduction that you can take if you essentially check that box. Yes. Okay. State of residence is California. Yep, I live here. I've lived in another state. I'm going to check this box no. If this is you, make sure you let me know and I will go through that situation for you. That would be like a part year return, right? That we would have to do, one for California or wherever state you're at, right? One in one state A and one in state B. Someone else can claim me as a dependent on the return. I'm going to say no. I claim myself. I was considered legally blind. No, not blind. I'm preparing this return for Anthony, who has passed away. No, I'm still here. I want to change the language the IRS uses. No. Continue. Let's find the right filing status for you. Well, I'm going to check married. Let's see here. Man, to learn more. These are actually really good that Intuit has here in terms of like explaining how these things work. So I'm not really going to go over this unless anyone has questions. Again, just make sure you either throw those in the comment section or in the chat as we go along here. I will address any of these moving forward. Okay, so I'm going to check married. So essentially, filing status is how this work. If you're married, you have generally really only two options, either married filing separate or married filing joint. That's the two options. Now, if we do live separately from the spouse for over, I believe it's 6 months, and you have a dependent that you are paying over half of the living expense, we can do that head of household, right? I believe, man, if my memory serves correct here, of course, it's not going to tell me that had a household option, but that's okay. Or if you're legally separated, you're not divorced yet, but you're legally separated, we can do that as well, the single. All right, so continue. And I want to file jointly. Yep, 94%. So a lot of people always ask me, is it more beneficial to do separate or jointly? And as they're saying 94%, I generally say 9 times out of 10, it's more beneficial to file jointly than it is separate. There are just so many credits, deductions that get limited when you file separately. So if you are married, it is more beneficial for at least tax purposes to file jointly. Now, I do know a lot of clients of mine want to file separate for student loan purposes because of the income. When you put both the incomes together, their minimum payment goes up because it's based on the AGI from the tax return. So they file separate because of that. So that's, I know, a very popular reason why people do separately. But it's not good for tax purposes, essentially. All right, so I'm going to put jointly here. Name of my spouse. All right, let's fill this out. There she is, 01/01/19. She has the same date of birth as me. No, she doesn't, but that's okay. 555555. There we go. She's also a tax accountant. Okay. And no, she's not part of that. We lived in California all year. Someone else can claim. No. Considered legally blind. No. Has passed away before the filing. Nope, she's still alive. I want to change language. Nope, speak English. Well, she also speaks Spanish, but nonetheless, we're doing English here because I'm doing this. And I'm not really good at Spanish. Let's look at who qualifies as your dependent. Okay, well, I have 3 kids and they all qualify. But here we go. Let's do it. Child 1. Child 1. There we go. Of course, you can't do 1A. We'll do child A there. All right, 1, let's say 2020. Born in the COVID pandemic, which my daughter is. Okay, there we go. Daughter is there. Boom. Child, okay, there are kids. None of these. And none of these. Not adopted or foster child. Okay. Keep going. All right. Live stream looks like it's doing good. Deal. Did the child live with you for the whole year? Yes, she did. Was in the U.S. Yep. Did the child pay for more than half? Nope. She is way too young for that. Looking good. Still my dependent. There we go. Let's check if any other relatives. The relative in your home for more than half of the year and help support child finance. Did a relative of child other than you live? No, no one else lived in our house. That's it. As nice as that would be. See, there's some others in the chat or in the stream here. If you have a question about TurboTax, make sure you do leave that here in the chat box or in the comments. I'm here to help. Good news. Child qualifies. Awesome. Let's get the child social. I'll say 6 on this one. Not valid. Continue. Okay. I'm just going to do 1 kid for now. There's no need to put all of them. Enter your current mailing address. So yeah, this is actually very common that I get as a question is, what address do I use for the tax return? The address that is best to be used for the return is your current mailing address, because if the IRS sends you a notice, where is it going to go? You want it to get to you, whether that be a good notice like a refund check or a bad notice where, hey, maybe they are going to put a lien on your account. You want to know this before they actually do this, and they will warn you. The thing is, if you don't get the mail, then you can't take the necessary steps to make sure it doesn't happen. Okay, so I help a lot of people with like tax debt, and that's like an issue that they have is they're moving around and they don't update their address with the IRS. So yes, you do want to make sure that you are putting your current address here. So that's why it's saying this, okay? I'm going to do a bogus address. There it is. All right, we're going to say, yep, that's us. That's not me, though. Stay informed with SMS. I'm going to say no. Did either of you make money in any other states? No. We were in, well, you're going to say we're in California the whole time. All right, so yep, we're married filing jointly. There we are. Deal. All of us. Awesome. Continue. All right, look at that. Trying to sell us on some more stuff. Man, I've had a client come to me before who actually bought this audit defense thing. They got audited and they went back to TurboTax and somehow didn't get help from TurboTax on the audit. So he hired me to help him out. So I don't know how really good this is, to tell you the truth. That's the only, I guess, anecdotal experience I have with this. The only experience. So I guess, look it up. Do your own research on this if you want to do something like this. Not now. Great. Yes. Thank you, Garrett. I like the comment. I appreciate the support here. Let's talk about some income and expenses next. All right, let's go. Let's find other income we may have missed. Well, I haven't put any income in there at all, so I don't know why we're saying this. Did you or Emily have any more investment losses or gains in prior years? Okay, I know why they were asking this, because we haven't done a TurboTax return before. So they're asking for carryover amounts here. I'm going to say no, we didn't. To make it a little easier. Did we sell any property owned by a business? We're going to say no. Did you or Emily put money into a retirement account while you were self-employed? I'm going to say no. Did we get interest from selling a house in installments that were paid off in the same? No, these are all carryover amounts. Did you or Emily sell your main home? Well, this is not a carryover. We'll say no. We can always do this kind of later here. Did you or Emily own or control a foreign bank account? The F-bar, the infamous F-bar. So essentially, if you own over $10,000 in assets in a bank account, foreign bank account, total, not just like in one. So like if one has like 1,000, the other one has 10,000, right? Or one has 1,000, 5,000, 3,000, 4,000, right? If it's totaled over 10, then you have to file this F-bar, foreign bank account reporting is what it is. So that's what this is saying. I'm going to say no, but I do have clients, right, that do that. So this is something I'm familiar with. It's a pretty straightforward form to fill out. You just got to put like, the foreign bank account itself, the account number or the address of the bank, and then, do the, what do we call it? The conversion, the translation of the currencies, right? From the exchange rate. There we go. The exchange of the foreign currency to US dollars. Continue. And that 10,000, so sorry, that 10,000 has to do with the conversion to US. So, you know, right, we might have like a whole bunch in other currencies, but in US it's not worth over $10,000, then you wouldn't have to do that. All right, so here we go. Income and expenses, meat and potatoes of TurboTax. Let's do it. This is like a super common one, W-2s. Let's get started here. All right, so we're going to work on my W-2. Deal. And I have, look at this, a mock W-2 that I just made up here. Okay, it does have a 2021, and I know we're doing 22s, but this is just for illustration purposes. Okay, so let's do it. They are asking here the EIN, that's the employer identification number right here. There it is. Okay, let's do that. We'll do 1, 2. I'm just going to copy paste it. That'd probably be easiest, right? This is just a bogus number, obviously. Deal. Continue. So you can upload this or snap a photo with your phone. Or you can type it in yourself. Okay, deal. Well, let's try the recommended. I'm assuming this thing's not going to do it because I just kind of made this thing up. But let's give it a try. Let's upload it from the computer. Okay, let's do like a drag and drop. Deal. Look at that. Okay, some stuff kind of went through. Look at that. Company name is the name of the company. Okay, EIN didn't go through. All right, well, it's all there. Well, for the most part, I guess this is something you would want to employee info. Right there I am. Nice. Okay. This is something you're going to want to double check if you do this, right? Make sure all this kind of flows through properly, right? Make changes if you don't need to, or sorry, if you need to, as these tax returns can get rejected for e-file if things like this don't match up with what was filed with the IRS. So make sure that you do that properly. Just gotta. Okay, deal. Let's keep going here. We're gonna say it looks good. I'm not gonna e-file this thing anyways. Wow, look at that. That all populated pretty well. Look at that. Okay, just check the boxes and those all look good. Nice. So I would double, triple check this. That's for sure, because these are what's reported and what you're going to be taxed on. Okay. So they look good though here. Do we miss anything? Max D. Okay. Yep. Look at this. We missed this here. So I put like in 12A, D, this is like a 401k contribution, this $4,000, and it didn't pick that up here. So we got to make sure we do select that, right? That 401k amount. It did get the amount for healthcare. That's good. Retirement box plan is checked. Deal. You just got to make sure we double, triple checking all this stuff. Look at that. So we missed the box 14. No, we got that right. SDI, state disability insurance. That's correct. Okay. Just looking here on my other screen, but that looks right there. It's a common one. Oops, didn't mean to do that. Delete, keep going. This is important here. State taxes, right, for California, 1, 2, 3. I kind of just bogus that one too, but look, it didn't pick that whole thing up there. So we'll copy paste that in there. 40,000, yes, is what we got paid. Same as up here, taxable. And 1,200 is what we paid in tax. Look at that. Those flowed through. Nice. Okay, deal. Continue. Let's review the amounts. Yep, those look correct, right? This is also accurate, right, or important. Medicare, because once you reach a certain threshold, I think it's $250 when you're married filing jointly. If you make over that, there's additional Medicare tax you have to pay. And if you've already paid it, we take it into account, which is what we're doing here. All right, so 4, 6, and 7, but we don't have anything on 7. So that looks correct. Keep on keeping on here. Your federal refunds so far, $6,000. Awesome. Look at that. You know, when I do tax returns, I never like let people know as I'm doing it where we're at because it gets them like too excited for that type of stuff or too bummed out. It goes both ways. So not a big fan of this kind of thing here because I'm not even done. So why would you even show me that, right? You get me all excited for no reason. Let's check for uncommon situations. Okay, well, right, corrected. That happens sometimes. Unreported tips, paid family leave. Deal. I'm going to say none of these apply, right? Okay, super uncommon, a lot of those. Deal. So I could add another W-2 for my wife if she got one as well. But I'm going to keep this simple here for illustration purposes. Nice. All right. So if you were married, had one W-2, we're doing great here now. You know, I could essentially hit continue and move on to the next section of this filing. You know what? That's what I'm going to do for now. This first stream, simple as it gets. Let's just hit continue. Later, I'm going to come back and do all those other income things for a different stream. A friendly reminder about retirement savings credit. Okay, deal. Looks like we might be eligible. Did either of you take a disaster distribution? Disaster distribution. I know what this one is. I like to call these the COVID special years. If you took out of like a 401k or IRA during, right, pensions, tax, right, yep, during I thought it was a 2020 qualified disasters. This includes COVID-19 in 2020, right? That's the one I'm familiar with, but it looks like there's other ones in 18 and 19. You could have elected essentially for that amount to be taxed over 3 years. That's what this thing's saying, 1/3, right? And you got to report that here on the 22 return, right? Because 2020 would have been 1 year, 21 would have been the second year, 22 would have been the third year. There you go. Okay, I'm gonna say no, we didn't. I'm sure if you did your if you did your taxes in TurboTax previously, then I'm assuming they would have just already accounted for this. Did you have any financial interest in a digital asset in 2022? Yes, I'm going to say yes, we did. Digital asset. What is that? There you go. Bitcoin, cryptocurrency, stuff like that. Awesome. All right. Where are we at? Concurrent viewers. Deal. Look at that. I got 4 viewers in here. Ha! Awesome. Okay. Just checking. How are we doing so far? This is, oh my gosh, they're always doing that. Time to find all those tax breaks. Let's go. Let's find other tax breaks. Ebony Cueva. Oh, thank you, Ebony. Are we going to pay 10% penalty on the distribution in 2022 for the distribution in 2021? I'm assuming we're talking about a retirement distribution here. The 10% penalty. Right? No. So no, if you qualified for one of those like that COVID, 2020. You pulled out of the retirement account and you said it was a disaster, like I was just going over, you can avoid the 10% early withdrawal penalty, which is what we're referring to here. And you would only be paying the repayments essentially. So let's see here. How does that work? Let's say I pulled out $10,000 out of my retirement account, and I qualified for the COVID disaster relief, right? 2020. And I'm like, okay, I want this thing taxed over 3 years. So 10,000, 3 years, 3,300 roughly a year, right? That we're paying on taxes. So like I would add $3,300 in 2020, 3,300 in 2021, 33 in 2022. That 10% would be waived on all those years. So you'd not have to pay that early withdrawal penalty, again, if you withdrew before 59 and a half, so long that you qualified for that disaster relief, right? And there are caveats to that, which we can go into in detail at another time. If a lot more people have questions about that, I can definitely address that. So there we go. Hopefully that answers that question. Okay, let's get back to doing deductions and credits. Let's find other tax breaks that might apply. Did you or Ebony make any estimated payments? Let's just say yes, we did. Let's just go through that. Did you have an HSA? Did my mic just go out? I'm not so sure what happened there. No, I'm still here. Let's say we had an HSA. Yes. Did you or Ebony pay foreign taxes? We'll say no, we don't pay foreign taxes. Do you have any energy saving improvements to your home? This one's, I feel like a lot of people miss this when they do improvements. There's small credits that we can get for this. Let's say yes. We got it. I thought the COVID-related distribution ended December 2020. Correct. That's gimme. The COVID-related distribution, yes, it did end 2020. So it was a 2020 tax year thing that happened. You would had to have pulled out of a retirement account in 2020. The thing that we are going over right for 22 is if you made that election to have it taxed over the next 3 years, that third year would be 2022. So that's why essentially TurboTax is asking about it and why I'm covering it right now. Okay, so again, if you pulled out, let's say, $10,000 in 2020, like you're saying here, and you elected the 3 years, right, $3,300 a year, that $3,300 would have to go on this 22 because this would be the third and final year for that. So great comment there. Appreciate that. I can clear that up. Let me know if you have any other questions. I'm here to try and help. Did you or Ebony own state income tax last year after you filed your return? So it's asking essentially for the state and local tax deduction on itemized. We'll say, no, we didn't. We got a refund. Did you or Ebony have any work-related moving expenses? We'll say no. And did you or Ebony pay taxes on a boat? So this is like the DMV registration. Essentially, there's like the licensing fee. I think we call it here in California. Gonna say no. I didn't get any toys or a plane. That's pretty cool. Did you or Ebony have any adoption expenses? No, unfortunately, we don't have that. Okay, continue. Tax breaks. Let's go. Let's say we own a home, right? Let's do this one. The mortgage. Let's get out a mock 1098T. Look at that. Deal. Again, I know these say 21, and we're going over the 2022 tax return here in 2023. Haha. Super confusing. But 2022. Okay, deal, right? We'll cover the 1098. That's exactly what I just pulled up here. The where does it say the 1098? There it is, 1098. 1098 mortgage interest statement. So if you have a loan, you have a mortgage, make sure you do not do your taxes until you get this 1098 form. This is super important because you will get deductions. I'm biting my lip on this. You might get deductions, right? Because the itemized deduction has to beat the standard. And if it doesn't beat it for the feds, a lot of times here in California, it will beat it for the state. So keep that in mind. If you live in a state that doesn't have income taxes, this may not make a difference. But hey, it might also make a difference. So keep in mind that, you at least give it a shot. It doesn't hurt to wait to do your taxes until you get all the forms to make sure that you get all the deductions that you are eligible for. All right, so yes, I got it. Did you pay? Yes, I do. I have a loan. I got the 1098. Let's get ready to get impressed. Okay, let's see it, TurboTax. Look at that. Okay, thoroughly impressed. You can log into your the bank that you have the mortgage with. It looks like, right? That's pretty cool. All these banks, essentially. Pretty cool, pretty cool. I know, Mr. Cooper, I see that a lot of times. Wells Fargo is super common. Man, a lot of these other ones I feel like are rare. Where's that Schools First? I saw Schools First somewhere here, but I do see that one quite often. But I'm going to say I'm not logging into my thing. Looks like you can search other ones too. But let's say I just want to upload it, bring it over from my bank, use your bank credentials, right? Log in or upload it. I'm going to say that, or you can type it in yourself. Let's see what happens if I upload it. Good luck, TurboTax. What about mortgage insurance this year? Um, that's a good question. Is mortgage insurance, what do they call it? PMI, is that deductible on your taxes? Man, I'd have to take a look for 22, but I'm almost positive that did not change. I don't remember in any of my continuing ed that I saw anything on that thing changing. So I don't believe so. I'd have to double check that. So don't quote me on it, but I do know it's generally limited to income, right? Of course. So if like your income's too high, then you won't be able to deduct that mortgage insurance, PMI. Okay, look at this. Okay, well, this is what we pulled over when we did that. You were close. It's called mortgage companies, anyhow. The lender. Deal. Keep going. Any uncommon situations? We refied. Spouse co-owns this loan, and we only pay a portion of it. Okay, I have seen that before. The seller is financing this loan, and we didn't receive a 1098. Those are definitely uncommon. That's right. So I'm going to say none of these apply. Oh, look at that. Pulled it over pretty good. Deal. Let's see what happens here. All right, 98, right? Yep, that's how much I paid in interest on the loan, and that's what is deductible. Okay, well, caveat, if your loan isn't over like 750, if you got it after 18, I think is what it is. Okay, deal. Mortgage origination date, there it is. Okay. Mortgage insurance, right? It's asking for the mortgage insurance. Let's see here. Lenders, okay. You pay mortgage insurance so you can qualify for a loan. We know that PMI, it's not a fun thing, but usually because your down payment is too low. If you pay mortgage insurance on qualifying after 2006, you can generally deduct the premiums as additional mortgage interest. However, beginning in 2022, mortgage insurance, there it is, answers your question, Ebony. 2022 mortgage insurance premiums are no longer deductible. Wow. Oh man, that is that's rough. I don't know. It's just a bummer. It's like, oh, you can't put a big down payment, so you have to pay insurance. And oh, even though we used to give you a deduction for that, no longer. Man, at the end of the day, it is what it is. Taxes are taxes. Most of us, regular folk, not much we can do other than try and vote, I guess. But nonetheless, looks like there it is. We cannot deduct that. So not even sure why we asked this question. Like, really, don't get it. Okay, let's see here. This one we can deduct, right, up to a limit. But nonetheless, didn't get it. Pulled it over here. 92 is what we paid in property taxes. So this happens actually a lot. This is a good one. From experience here, right? I get these 1098s, all kinds of them from all kinds of different, taxpayers here, clients. And a lot of times this property taxes does not show up on here because property taxes are not impounded with the mortgage payment. So when the lender issues this 1098, they don't even know how much taxes you paid. So you would have to go and essentially look at how much you paid for this year. Generally speaking, right, the taxes are split like, what do they call it, semi-annually, right? So you'll pay like 2021, 2023 property tax year, right? So the thing is, you want to see the payments that you were actually made in 2022. So I would have to look at the 2021, 2022 tax year, right? That second payment for 2021 or 2022, sorry. And then I'd have to look at the 2022, 2023 tax year and look at that first payment, right? Combine those two together and throw it on here. I know that here at Orange County, California, we have a great website that you can kind of just look it up yourself and see on there how much was actually paid in that year. So I generally do that a lot of times for clients on their behalf if it doesn't report it here on this 1098. Sometimes people are late, right? And they'll make 3 payments in 1 year, so you can combine all those ones in 1 year. Things like that. So you want to make sure that, again, you look at how much actually was paid in that year. So, but in this case, property taxes are impounded with the mortgage payments, so they are reported on this 1098. So we'll just put that in there, right? 92.46. Boom. Box 7 is checked. Well, generally this is checked because it's like your house, but sometimes it's not because it's a house that maybe it's a vacation house, right? Okay, there's that. Mortgage origination date. Wait, mortgage acquisition date. Leave bank if empty on your form. Okay, there's. All right, let's continue here. Is a loan secured by a property you own? Yes. Sometimes you have a loan for someone that the deed is in someone else's name. I guess that's what would happen here. So there's that. Continue. What kind of property is this loan for? We're going to say it's our primary home. This is the most common situation. Did you pay points in 2020 when you took out the loan? We've already deducted. Generally, you're going to deduct it in the year that you paid the points for. So I'm going to say we've already deducted those. Is this 1098 the most recent for your loan, right? Because did you refi? Right? Yeah, refi. There it is. And if you refied, you would have two 1098s. That's a mistake I see a lot of people do. I don't think a lot of people refied in 2022 because of those interest rates went up. So I don't think this is going to be a big deal here this year. But if you did refi, maybe at the beginning of the year when the rates were still low, then make sure that you go back to the old lender and get, so you'll have two 1098s here. This is actually, a lot of people miss this thing. So make sure that, yeah, you do go get the first 1098 from the previous lender. If it's the same lender, you probably have two separate accounts. Make sure you go back to your old account to get that. So I'm going to say no, we only had one. Continue because 2022 interest rates went up and everyone's like, no, we are not refining here. HELOC, let's see if we can get a 1098 for, this loan is a home equity line of credit. This loan is a refi. This loan is neither of these. So this is like, I'm going to just say this is the original loan deal. Thanks, we got your mortgage information. Deal. Next. It's going to say we're still qualifying for a standard. I think that's what that just said. I went too fast. Okay, we're going to hit continue. That's the only 1098 we have. Deal. Look good. Home energy credits. We're going to say we'll skip that. We already got the child tax credit for the daughter here. Just checking the stream here. Looks like we're doing good. Okay. Dependent care credit. So if you have your kid in a daycare, preschool, we want to make sure that we get the credit here. It's not a big credit, but nonetheless, you do want to get that. The way you start with this is you want to go get a statement from that daycare provider or the preschool, essentially, on the amount of tuition paid and their information. And it would be pretty straightforward on that. The IC, because we have low income, I put like $40,000. It's now probably qualifying for us. The earned income credit. Donations to charity. I'll do donations here. Do you want to enter donations? Yes, we'll say we went to Goodwill. Did you donate in 2022? Who did you donate to? Enter one charity at a time. Goodwill, we'll say. I know we go to Goodwill a lot here. It's right around the corner, and we are always dropping things off because we have the kids, and the kids grow up, and then the clothes become useless to us. Okay, let's go here. What did you donate? I'm going to say items. And look at that. This thing is actually pretty cool. Date of donation, we'll say 9/15/2022. Continue. Add or edit. Look at this. This thing's pretty cool how it finds value. So a lot of people tell me, they donate things and they give way higher values than really what they truly are. So this, I think, is a great, we'll do infant clothing, right? Look at that. Bodysuits. I don't even know what that is. Like a dress, right? High value, low value. You could put like the amounts in there, but this would be a great idea to kind of fill this thing out just in case this thing get audited. We can kind of prove, hey, where did we use like the valuation for the amounts that we reported? So here we go. We'll say like 4 pants, 4 shirts, 4. And let's see here. Do we have any shoes? Sweaters. Yeah, we definitely have some sweaters. Let's see. 5 sweaters. Thermals, some onesies, undergarments. I mean, I know pajamas. We do a cajillion of those. We'll say some onesies. Here we go. Let's say we've got 5 of those. Add those. There we go. You can just go through that. I'm not going to look at that. $45 is what we have so far. Okay. We're just going to hit done with this. Done with this donation. We're done. So you then every time essentially you go to donate your stuff, you should kind of get like some type of inventory on what you donated. So you can fill this out a little more, I guess, detailed and get a proper amount there. Every time you go, you do need to get one of those little slips from Goodwill. And I know people come to me or Goodwill, Salvation Army, wherever you're going to donate these things. And I know people tell me, well, I get the slip, but they don't put anything on there. Well, they are not the tax accountant. They are not the auditor. They are not supposed to put that on there. All they're putting there is that, hey, yes, you did stop by this date. I saw it. I signed it off. Here's the date. Here's my signature. So it's on you to do that, okay? There's my spiel. Next. All right, we're done with charities. Done. Thank you. All right, what else can we do here today? I got like another 20 minutes on this stream. Let's go. Car registration. Okay, deal. Do I have one of these examples, though? I'm going to have to come back to this because I don't have one of these examples. Car registration is a little tricky because you are able to deduct the amount for the, what do you call it, the vehicle registration, vehicle licensing fee, vehicle VLF. Yeah, VLF. And when you, at least in California, do you know this? The DMV, you go to the DMV and you renew your registration, they will provide you with a breakdown of what essentially, the fee is. Let's say it's $200 to get your renewal sticker for your car, for the registration, and maybe like $100 of that is for the vehicle licensing fee. Forget the name of it every time. Vehicle licensing fee. And that $100 is what is deductible as like a local tax, essentially. Everything else is, I guess, not a tax. It is what it is. Okay. Let's go. HSA. Let's see. All tax breaks. Oh, so there's more things. So like if I didn't put something there, we can always kind of come down here to see if there's anything else, right? Deal. All right, continue. Home buyer's credit. Oh, this is, 2008. So because of that, like, financial crisis that happened in 2008, people were given like a credit when they went to buy the home. The thing, the catch on that credit, which is horrible, is that you have to repay the credit. So that's what's going on here. I've had returns get rejected a lot because we didn't report that. I know there's a great website, you know what, on the IRS home buyer credit. Shoot. Let's see what it says. Yes. So you can look it up. Like how much have you already paid? So like when you fill this out, I'm sure they have like a thing on here too. If I hit that yes, but you can always go on here, first time home buyer account lookup. So you can go here, right, and look up with your information where you're at, how much that credit was when you initially got it, and then how much you've already repaid and what you should be reporting on the return as a repayment. Wait, what? Child dependent care. Why did I go so fast on that one? Okay, so sorry. Here we go. Child dependent care. So I don't have an example of one of these currently ready, so I'll come back to this one. So that's child care and DMV. Care, DMV. We'll come back to those on another day. Retirement savings contribution. Yeah, so because essentially there's like an income limit if you earn under a certain amount, and I don't know the details on this. I'd have to, I'm sure, learn more. Is going to tell me exactly what these amounts are. How do I qualify? There they are right there. If you earn under that, right, AGI, gross income, is less than that, and you did contribute to a retirement account, i.e. like 401k, IRA, etc., you'll get a credit. The IRS essentially will give you money because you did that. So that's pretty cool. Which retirement, right? Yeah, TurboTax will probably calculate this for you. We're going to say, no, it's not a full-time. No, Ebony was not a full-time. So let's see if you qualify for the savings credit. I'm pretty sure I do. No, I was not a student. No, I didn't make any additionals, right? I had the 4,000 on my W-2. So we'll just say no, 0. 0. Ebony did not. Continue. Did we receive any distributions? No, we have not pulled out of the retirement. Congratulations, we got the $1,000. Wow, that's pretty cool. So, of the 4,000 I put in there, essentially I only had to pay 3,000 because the IRS gave me $1,000 for that. That's pretty cool. There it is. All right, continue. Let's see what else we got here. Of course, it's going to give me the standard. So, let's see here. It added the state taxes we paid, the mortgage interest we paid, property taxes. Well, property tax and state taxes were limited to 10,000, which I know 9,000 of that was property. So I know we hit that 10,000 mark there. The 9,000 for mortgage interest, and then like the 44 some odd dollars. So that's why we did not beat the standard. So we take the standard. Of course, we'd take the standard. It's a deduction. You want the bigger of the two. For uncommon situations. Do any of these uncommon tax situations apply to you? Did you or Emily qualify for investment, credit, recapture? Nope. Did you hire a live-in nanny or household employee? We'll say nope. Did you or Emily want to apply your refund to next year's return? No, we want that money now. Do you want to designate $3 to the presidential campaign fund? I do not want to. No, Ebony does not want to either. Did you or Ebony experience ID theft? This is a something that can definitely hang up the return. So if for some odd reason you got reported for ID theft and were issued one of these pins, identity protection pin, right? Identity protection pin, yep. Then you got a letter in the mail with this pin, and these generally get mailed out on a year-by-year basis. So you would need like the current year's pin for this, or this thing will not go through. It won't e-file. It's going to get rejected. So you would need that. You need that letter. You need that pin. And if you don't have it, you can call the IRS to get it. It is going to be like jumping through hoops to do this, pulling teeth. It's going to be tough. You can do it. The other workaround on this essentially is to paper file the return. That means print it out, wet signatures, send it snail mail to the government, which I do not recommend because then you have too many sticky fingers touching this thing. So I always recommend to e-file if you can. So if you get a rejection here because of this pin, you're going to have to call them. We'll say no, continue. All right, let's keep going. Confirm my social. Done. Time for a quick review. Check my info. Check in your return. Thanks for sticking around, Wilson Rogers and company. If you have any questions, again, I'm going to be doing this like twice a week. I'm going to be jumping on here. Now, I'm shooting for Tuesdays and Thursdays. But it might just be this Saturday morning. I think this Saturday morning is going to work out for me. And I think it will help out a lot more people because they have Saturdays off. So I will be here, I think, Saturday mornings. But if not, it'll be either Tuesday or Thursday at like 3:30 or 4 o'clock Pacific time. Okay, let's keep going here. Let's take care of these details now. Of course, these all need review because these are all bogus. Oh, geez. The EIN didn't match, of course. Okay, let's do that now. We'll do 1, 2, 5, blah, blah, blah. let's do from my little bogus W-2 that I did. Paste. Okay, continue. This one is for your loved one's reward. What did that just say? But a little extra cash never hurt. Oh my gosh. I love it. I love it, TurboTax. Do any of these uncommon situations apply? I mean, I got a notice saying that is required. No. Do we want to claim the additional tax credit this year's? We don't want to claim. What? Why would you not want to claim that? Not so sure I understand that. Tell us about your residency status. No, we were not in Puerto Rico. No. Okay, deal. We qualify for the credit. Earned income credit. What is the earned income credit? Let's see here. Okay, so what is the earned income credit if this qualifies for you? Essentially, it's like the government giving you some money because you did work, but you made under a certain income, essentially. And there's this massive table on the breakdown of how much you get depending upon your filing status and how many dependents you have and your income. It's complex. Nonetheless, you can always look up EIC tables. They have it. But this is a gimme from the government, essentially for working again and earning less than a certain amount based on that fun table. Did we live in the U.S.? So there are obviously some caveats to also qualifying for this, right? Living in the U.S. Say yes. Uncommon situations. Were we claimed by someone else? Does our Social Security card say not valid for employment? Right? If we do that, then you are not eligible for the EIC. Any of these you check, I believe you're not going to get the EIC. We got a notice saying that the 8862 is required for the EIC. We got IRS notice saying that we can't claim the EIC. Continue. None of those applied to us. Congrats, you get a tax break. Federal returns, cool. On to the state. You're getting a refund. Wow, what a refund. Deal. Look at that. Great job. I love the wordings that they have on here. It's hilarious. All right. Well, it's quicker. The reason why state returns are quicker because they essentially start with the federal stuff and it just rolls on over. And then states have like little adjustments. But that's why it's a lot faster because you don't have to put the W-2, all these other stuffs. They kind of just rolls on over and they'll make their adjustments on the state. Okay, of course. Let TurboTax do its thing here. Deal. Look at that. All right. Continue. Did you file a return? Yeah, we'll say we filed. Did yours file a different? No, we'll say we filed the same last name. Continue. Is the same address? Yep, we'll say the same address. Your county. So, California requires that we put, like, what county were we on? Electronics payments based. I need to make electronic payments. California requires electronic payments if you have X, Y, and Z. An estimated tax or extension payment over $20,000, or file an original return with liability over $80,000. I'll say no, we don't have this. Do you have a dependent that you didn't claim on your federal return? No, that's it. Did you have health insurance coverage? So feds do not require that you have health insurance anymore. There was that, right? The tax law change that happened in 2018. That I believe it was 19 that the feds stopped requiring or stopped issuing that like penalty or tax essentially for not having health insurance. Well, fun stuff is California went ahead and picked it up, of course. So that's why it's asking this. So there you go. This is actually super important that we enter this in also because not only that credit, but there's also the subsidy, right? Covered California, or that's like the marketplace. I forget the exact name. I think it's called the marketplace. Covered California is what we call it in California. I do know that. In other states, they have different names for it, but essentially it's getting health insurance through the government, and they give you essentially like a subsidy. They give you like let's say it's normally like $200 for the health insurance, but you only have to pay like $120. That $80 subsidy has to get accounted for on the tax return. So it's important that we get that on here. And actually, it's generally on the federal return that we get that. The amount of the subsidy is based on the amount of income that you report when you get the health insurance. So this then reconciles with the tax return, because this is where the rubber meets the road, is the tax return. And if essentially the income is higher than what you told the health insurance people, then you would have to repay some of that subsidy. If it's lower than what you told them, then you'll probably get essentially like a tax break here. You'll get a credit for that premium. The premium tax credit. I believe premium. Mind is blanking on that. But you get a credit on the return for essentially having less income than what you reported when you got the health insurance through the government. Did you have all? We're going to say yes. We all had health insurance. Was anyone enrolled in any of these plans? Right there it is. Covered California. Healthcare.gov plan. So I think that's also another place, another marketplace. I knew it was called marketplace plan. There you go. So we're going to say no. If you did, you have to make sure you get that form, because you do need to report it. So the state form is the 3895. For the federal form, it's the 1095A is the form. Okay, this is super important. So we'll say no. That's all we need. Deal. Grant allocation received pursuant to California Venues Grant Program. California law allows an exclusion of gross income for grants allocation received pursuant to California Venue Grant Program that is administered by the Cal OSBA. Federal law has no similar. Okay, we're going to say no, we didn't get this grant. This is uncommon. Enter grants received by shutter venue operations excluded from federal income. Say 0. All right, looks like this is the end, and I really don't have any other viewers here. So this is my first stream. Again, I will go through this same exact return on either Tuesday or Thursday. I will post it on my YouTube as like an upcoming once I get my schedule straightened out here. And let you know it will be at 4 o'clock Pacific time, either 3:30 or 4 o'clock Pacific time. And if you have any questions in the meantime, feel free to leave those in the comment below so I can address those during our live stream. I'll be having these live stream at least twice a week until tax deadline on April 15th. So I'm here to help you guys out. Shoot, look at this. I forgot. It's my first time doing this thing, so bear with me. Forgot I can switch over to a self picture here. But if you have any questions, again, leave those in the comments. Twice a week, I'm going to be doing this stream. Again, my name is Anthony Fontana. I'm a CPA. I'm here to just help people out with TurboTax because of all the issues that I've seen that have happened, that have come across my desk from people that have filed with TurboTax. And they were just easy, simple things. Had they just had a second look at this, done this just properly from the get-go, but now they're in this like massive headache with the government who's after them for money, when they really just don't owe the money. Just catching the end here. Donna, looking forward to more. Yeah, so again, stick around. I think it's going to be either Tuesday or Thursday nights, like I was just saying. Around 4 o'clock Thursday nights. It's the afternoon. 4 p.m. Eastern time, Pacific time. 4 p.m. Pacific time that I'm going to be having these streams where I'll be going over TurboTax, essentially. So if you have any situations that you have questions on or anything like that, I'll be here to essentially share my screen and go over them with my TurboTax to make sure that you're doing those properly, or at least to help you out. Okay, Kevin, you missed this as well. So it's okay. I'll be back. Next Saturday, I'm going to do this as well. At the same time, it'll be Saturdays at 10 Pacific and either Tuesdays or Thursdays at 4. I'm so sorry that I don't have that straightened out yet, but I will put those on my YouTube channel, so be sure to look out. It'll say upcoming, and you can always join those there. I will post these after. I'll do my best to clip these for certain common things that happen or questions that I get a lot of, so you'll be sure to hopefully just take a look at those clips too and not have to struggle through the whole stream with me here. All right, well, thank you so much. Have a good weekend.